Welcome back, my awesome people. In today's episode, I will be highlighting some unknown and emerging markets that are in the stages of developing. Now, emerging markets describe economies that exist between the stages of developing and develop. The emerging market phase occurs when economies see their most rapid growth as well as their greatest volatility. In 2021, current emerging market economies include India, Mexico, Russia, Pakistan, and Saudi Arabia. When identifying emerging markets, investors and economists are looking for countries where there is very little political or social unrest and consistent economic growth. Investing too late in an emerging market is the biggest risk of this type of investment. China is a good example of an economy that was previously considered an emerging market. However, by the time that the majority of people became aware of the growth of the Chinese economy, it was already, on its way to becoming an economic powerhouse. At the height of an emerging market's popularity, investing can be very costly. Emerging markets have remained a popular investment area since their introduction in the early 2000s. Since then, a number of new funds and tools for investing in emerging markets have been introduced. Emerging markets are a unique investment opportunity because they offer equal parts of risk and reward. While there are huge gains awaiting investors that can identify the right emerging market investment at the right time, the risks involved are sometimes not well understood. So if you are open to investing in emerging global markets or just sick and tired of Western market, then stay tuned because there will be some excellent insight and news about the global markets and whether it's worth investing in. So why are emerging markets becoming the focus in this current economic downturn? Well, high inflation, aggressive monetary tightening, and the potential for a great recession are all global fears, especially among developed and Western nations where the average citizen has a lot to lose. And for many emerging markets, navigating a recovery means taking a clear course of action. Keep inflation under control at the risk of slowing growth. And guess what happens? When inflation is under control in a year or so, boom! You will start seeing tremendous growth in these emerging markets. Over the last several years, it wasn't only that growth stocks were beating value stocks, it was also that companies with low or even no profits were beating highly profitable companies that were trading at reasonable valuations, a trend that did not make sense from a fundamental perspective. While we don't know yet whether the apparent turn away from the most expensive stocks is a passing fad or here to stay, it is possible that reasonably priced, successful growth stocks could perform well in the near future and beyond, and as could high quality value companies. So both growth and value have great potential. Hey, my awesome people, if this video gave you something to think about or something to put on your watch list, subscribe to the channel to get all my updates and investments. And follow me on Twitter at Jacob Rant and on Instagram. And if you want $25 of real cash money for free to buy your favorite stocks, sign up with my Wealthsimple link down in the description box below and start investing. If you look at the earnings outlook of many companies, they are likely too high as emerging markets suffer the ripple effects of COVID-19 lockdowns, inflation, and global conflicts. Expectations for 2022 earnings growth in emerging markets equities remain in negative territory, overall weighed down by slowing growth, weakening currencies, and supply chain disruptions. Emerging markets is a diverse asset class and not all experiences will be the same. Earnings growth expectations in Latin America lead the developing world at 15%, outpacing Japan and Europe. Latin America's improvement has rippled across sectors, largely driven by energy, materials, financials, and communication services sectors. Outside of Latin America, emerging markets appear more flat compared to the bigger markets, but finding good opportunities at the right price is possible. While inflation across emerging markets generally remains elevated, energy exporters such as Brazil and Saudi Arabia are benefiting from improved current accounts versus energy importers such as India and wheat importers such as Egypt and Indonesia. At the same time, countries such as Hungary Hungary, Serbia, Turkey, Argentina, and India have all moved to limit exports of certain agricultural products in response to the crisis of soaring inflation. As well, some emerging countries like Turkey and Argentina are still suffering from legacy structural issues. These issues may have become even worse, particularly for countries with relatively high US dollar denominated debt. While emerging markets debt has been under significant stress since well before the recent increase in inflation and recession risk, the asset class has weathered similar storms in the past, and investors who stuck with it have been greatly rewarded. Also, the central banks of emerging markets are well ahead of their developed markets peers in their tightening cycles. Several emerging market countries have been hiking rates for more than a year already. We are beginning to see opportunities in select markets where the tightening cycle is coming to an end, such as Brazil, which began the process in March 2021 and has since hiked 11%. Chile is also nearing the end of their tightening cycles and are looking increasingly attractive. As such, several countries will begin cutting rates in order to stimulate their economies after the end of their tightening cycles. Well, I personally, just my personal opinion, I personally am not a fan of investing in China. Yes, I get it. They are a superpower with ultimate power and resources. But with that power comes control. And unfortunately, China controls and restricts companies as they please, pretty much capping and putting up a ceiling of how much a company can grow, and other restrictions. While China's pressure to grow is still strong and will likely prevail far down the line, there are extreme hurdles that companies in China will have to overcome. First, regulatory crackdowns from the government, which have weighed heavily on the technology sector. Companies like Tencent suffered as regulators froze approvals and imposed restrictions for products, all due to concerns that Communist Party values were being undermined. Second is their zero COVID policy restrictions that has led to a deeper than expected economic contraction. The Chinese government's zero COVID strategy led to restrictions in major cities like Shanghai and Beijing for several weeks, cutting into spending, shutting down factories, and blocking supply chains. And my third reason is the delisting of Chinese stocks and the possible expulsion from American exchanges. And this has fueled major uncertainty. Although China has all these problems, China still remains a vast market with extensive growth potential and an environment of innovative thinkers and producers. While global expectations and sentiment have been not so good for China, a market that has struggled over the past year, for investors, this type of environment marks a good time for investors to uncover new opportunities and companies that are attractively valued. On the other hand, many US blue chip stocks offer decent exposure to emerging markets as well because of their products and global nature. For example, the revenue mix of Coca-Cola reflects the fact that it is popular in both China, Japan, and the US. And buying blue chip stocks or funds such as ETFs that invest in these stocks can add emerging market exposure with a balance of developed market stability. So, Jacob Rant, what are you doing? Are you buying companies from emerging markets or are you sticking with the Western markets? Well, heading into the first half of 2023, the key question is whether the global economy can get through the higher inflation expectations and tighter monetary conditions, or if it is slipping into a great recession, especially in North America. If companies continue to get hit throughout the next 6 months, but still have strong fundamentals, then I will be highly looking at Africa and India as my two emerging markets that I am favoring. Of course, I will be posting a video of the exact stocks that I will be buying from the emerging markets. So subscribe so you will get notified of when I do make those posts. Compared to the developed world, emerging markets have held up better this year. year. And this could be an attractive entry point for investors to gain exposure to this asset class. Emerging markets, which offer access to higher economic growth, are trading at a 30% discount to developed markets, while offering investors a higher dividend yield, a higher free cash flow yield, and a return on equity that has been improving since the end of 2020. The only problem that I have with emerging markets is that they are no longer as diverse as they used to be. China now accounts for around 30% of the world index, and future investment returns from emerging markets now largely hinges upon what happens in China. The rewards of investing in an emerging market can outweigh the risks. Despite their volatility, the most growth and the highest returning stocks are going to be found in the fastest growing economies. And remember, milestone people, just like all the information that I post in my videos, please do your own due diligence, because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with and $0 commission fees that won't eat into your profit, sign up with my Wealthsimple link down in the description box below for $25 of free real money. Link is below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out this channel, and so you will get notified of when I post my penny stocks, my REITs, my dividend stocks, my speculative stocks, and any other investments that I'm buying or selling. I want everyone to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting.